Yeah, so it's an interesting point that you raised there. A lot of the reopening trades actually sit in the sort of FTSE 250 area. And actually, where we think there's even more growth this year is in the sort of value space. And for us, we're looking at more the FTSE 100 area, where you've got a big exposure to financials, to energy, and to commodities.
Yeah, in terms of what we're seeing across on the FTSE, though, the level that we've been trading at, do you think that's the problem? It took so long to get back to the 7,000 point mark. We didn't hold it, and now the market just reversing a little bit off that. Do you think it's just a challenge because there's not been enough momentum to carry it higher to those levels we saw prior to the pandemic?
Yeah, there's a lot of debate always about the FTSE and when it gets to around 7,000. For me, I'm not so focused on the levels. I'm more focused on the valuations and the earnings backdrop. I mean, in terms of the levels, we see further upside. Our forecast for the year end is 7,300. So we do think it can carry on higher. We've got 58% earnings growth forecast for this year, yet the PE is still on about 14 times, which is below its long run average. So, I think that there is scope for the FTSE to move higher against the backdrop that we've got of improving global growth, and recovering inflation as well.
Good morning, Caroline. And yet, when I look at the big players in the FTSE, I look at the BP and Shells, and we're speaking to BP tomorrow. I look at the banks, and then I look at the large pharmaceutical companies. Those are the real heavy hitters in the FTSE 100. And you and I could create a very good argument why all of those stocks are pretty much stuck where they are at the moment. Maybe it's because of interest rates in the financials. Maybe it's because of the transition in the energy players. And, of course, the pharmaceutical companies. A lot of column inches about Glaxo and Astra at the moment.
Yeah, so I think on the financials and energy, we actually do think that there could be some further upside on those. On energy, if you plot the sort of share price performance and the oil price, they're actually lagging a little bit already. Plus, we see further upside to the oil price. Our target's $75 a barrel for the year end. So we do see there's further upside for the energy shares. And then on financials, the earnings growth from the financial space is incredibly strong this year. The slightly higher yields that we've already had, and we do expect yields to move up another sort of 20 or 30 basis points over the course of the year, again, is also very helpful for the financials. And then, of course, they've got these sort of excess reserves, which held them very well through the fourth quarter earnings season, and we suspect we'll do the same again in this quarter, and they're still trading below book value. So I do think there's lots of reasons why particularly financials and energy can move higher. I agree on the slightly more defensive sectors such as the pharmaceuticals. It's a bit harder to get as much upside, particularly because they have quite a lot of exposure to the US and to the dollar, and we do think the dollar will continue to weaken over the course of the year.